Welcome to The Business Strategist, the show for CEOs and founders ready to scale fast, lead smarter, and build a business that doesn't rely on them. I'm Adam Strong, award-winning strategist, former elite athlete, international speaker, and 3 times best-selling author. After 3 decades in business, I know exactly what it takes to grow, scale, and exit with impact. Each week, I dive into real conversations with industry experts, bold entrepreneurs, and clients navigating the uphill struggles of business, giving you the tools and the strategies to create more profit, more freedom, and more impact. Let's get into it. Hey guys, I just wanted to take this opportunity to make you aware of a brand new tool that we've just created called the Exit Readiness Assessment. Now, it is for founders and CEOs that are looking to exit from their business operations. Now, it doesn't matter even if you're not looking to exit right now, I would highly recommend to go and take the assessment straight away. It helps you to identify areas in your business that you need to work on to help you towards that exit strategy. And at the end of it, you get a personalized report on some of the areas that you're doing particularly well in and some of the areas that you need to make some improvements to. Make sure you head over to readytoexit.scoreapp.com. That's readytoexit.scoreapp.com. Enjoy. Some businesses look perfect on paper. They have strong revenue growth. They have a solid team behind them. There's a growing market for their industry. But when it comes to sell, they don't. There are no buyers lining up. There are no deals in the pipeline. And worse, they sell for what there's less than expected. So what's really going behind the scenes of a deal? Now, today, I'm joined on the show by the amazing Bill Snow. Now, Bill has been working in the trenches of the industry of mergers and acquisitions for probably the best part of 3 decades. That's 30 plus years. He's been involved in all sorts of deals, hundreds of deals over different industries, but he's also the author of Mergers and Acquisitions for Dummies. And I absolutely love that title, by the way. Bill's also going to be releasing a new book coming out as well that he's going to be sharing with us towards the end of the show. You know what's really going to be fascinating here? You got to make sure you got a notebook and pen handy. This show is going to be a massive deep dive if you are A, looking to sell your business, B, looking to buy a business, okay? 2 massive things. And Bill's going to be going and doing a deep dive on that. So without further ado, Bill, welcome to the show.
Thank you, Adam. I appreciate it. Good to talk to you again.
Likewise. You know, it's really interesting. I think I told you this, but I'm part of a couple of M&A WhatsApp groups, and I posed a question in the group, Bill, and I said, so we're coming up to almost 400 episodes, right? And I was like, so who can recommend a really good podcast guest? And believe it or not, a few of the people in the community, your name came up.
I don't believe that for a moment. You're a flatterer. No way. What's wrong with these people? Don't they have a life? I don't buy that for a moment. It's very nice to be thought of that way. I appreciate
Absolutely, 100%. No, it's really good. So that's why I contacted Bill, and now we're best of buddies now, which is really, really good. So, but listen, this is going to be a great show. I'm really, really looking forward to it. So, but I'd love to kind of jump in really, really quickly because I know we've got a lot to get through in M&A, and for you guys that are also listening in as well, make sure that you listen right the way through. You're probably going to want to pause and re-listen to some of the things that we're going to be covering, because Bill's going to be going and he's going to be coaching me towards the end. And that's the best part. I love that, right? That's the great part. So let's jump in. Bill, listen, after 30 years of a long time, I mean, you're a veteran in this industry. I mean, let me kind of go back to earlier on before you kind of got into M&A. What is something that you believed early in your career about M&A that turned to be completely wrong? Let's start with that.
That's a great question. And I had earlier in my career sales jobs like we all did, and it didn't really go anywhere. And you get a lot of experience when things don't work out. That's fine. I got into middle market in my late 30s. I've been in and around venture deals and angel funded deals and things like that. And then about 21 years ago, I lost a bet, had to become an investment banker. And I turned down the job 4 or 5 times, and the owner of that firm finally caught me at a moment of weakness. And I said, okay, fine, I'll go be an investment banker. Because I thought selling a company was going to be akin to a sales job, trying to sell, name a product or service. And it's just not what I enjoy doing. Some people are really good at it. I don't. It involves talking to people, and who wants to talk to people, right? I'm a closet accountant, and don't want to talk to people. So I was pleasantly surprised as I was making these phone calls. They had a client. They needed someone to sell it. They needed someone who could read a balance sheet, who could talk on the phone, and was quick-witted. They couldn't find that person, so that's how I got the job. And what I found by making the phone calls, and I'm talking, this is back in the day, we had the internet. It was still it wasn't certainly what we have right now. And I was surprised people are calling back. Yeah, tell me about this. And so I was having conversations, and yeah, we're not interested. And if they weren't interested, well, it's not really a right fit, but we really appreciate you calling, and call us again. It was like a hot knife through butter. And I thought, well, this is something very interesting. And so that was the first thing that I learned about M&A, is that the roles are reversed. And so the sellers quite often have an easier job than the buyers. The buyers have a far more difficult job. And buying a company, we were talking about this before you started recording, buying a company is brain damage work. And so you want me to coach you on how to buy a company. And so I said, make sure you start with a lot of brain cells, because you're going to lose a lot going through the process. Many more buyers are out there than sellers, right? And when you're selling a product, when you're selling a service, you're going to a grocery store, okay, we're out of milk, we're out of coffee, we're out of bread, whatever. You go to the store and you pick what you want, right? You're picking something off the shelf. M&A, the roles are reversed. It's the product is picking the buyer, because there's only one of the product. There's only one company. And if you have 5 buyers who are interested and have put bids and want to buy the company, as much as you would like to be able to replicate the company, you only have one company to sell. So in a lot of cases, not always, there's exceptions, and I'm dealing with an exception now, but usually the demand is much greater than the supply. And so when you have the supply, you're usually going to be in really good shape.
A couple of things I want to pick up just from what you just said there, just for the benefit of our listeners, by the way, especially us Brits, because there was a question that came up when we met, and you said, oh, I'm an investment banker. So just for clarification, can you distinguish between what an investment banker does in the US and what an investment banker does in the other Western world countries?
I'll tell you what an investment banker is not, because it's a terrible term. It's a very fancy sounding term, but it's a very, very poorly described, poorly descriptive term. That's what I'm trying to say.
Okay, fine.
We do nothing with investments, and we're not a bank. So we call ourselves investment bankers. Fancy word. And you won't hear this, because everybody else who gets into this racket, they're putting on airs, and they want to be fancy, and they want to, they have very impressive bios, and, they have their serious pictures, and it's absolutely terrible. None of us really advance past the age of 8. But it really is, I buy and sell companies as an agent for somebody else. So the business owner, somebody wants to retire, or a couple of partners own a business, they want to sell. Retirement is a big reason, but there could be other reasons too. Just tired, we've taken it far enough. I have some other business interests I want to go pursue, so I want to sell this. So we will sell that company, or maybe it's a business unit, maybe it's a division, something like that. So we will do that. That's the gold standard. That's the Cadillac, or I guess to you Brits, it's what's the top? It's a Rolls Royce over there, or it's a Range Rover, whatever your Vauxhall, or whatever your cars are. Do you still sell that car with 3 wheels? Because you guys couldn't afford 4 wheels, I guess.
They called that what's that? The Robin Reliant. Yeah, Robin Reliant. Or in Only Fools and Horses, it was Del Boy's freewheeler. That's what it was.
Yeah. Let's design a car that hits every pothole when we go down the street. So let's get rid of a wheel. We'll save money. It's a brilliant idea there.
It is definitely a great idea. Anyway.
Yep. So anyway, so yeah, investment banking. So investment bankers come in all kinds of different flavors. Most are more serious than I am, and they're all full of hooey, so you don't want to trust them. So any type of transaction that's going on, especially if it's a larger type of transaction. So a company wants to list shares on the stock exchange, the New York Stock Exchange, or London, or AIM, or is AIM still around? Are you guys still trying to steal all the Nasdaq companies, or is that running into some troubles over there?
I'm not that familiar, if I'm honest with you, but
Okay.
probably it's
Okay.
the
But
answer.
that's what investment bankers do. That's a whole other thing. We don't do that. They might get involved with government entities who are raising money by selling bonds, and so they focus on selling bonds and raising capital that way. So all kinds of different permutations of investment bankers. Just a fancy term for something that has changed in the capital structure in the business. Selling the company. Brain damage work will help you buy companies. Man, that is tough work. Don't do it. I'm doing that now. Believe me, it's brain damage work. As I told you before, if you want to end up being a reasonably intelligent person in the A game, start as a genius and try to buy a company, and then you'll end up dumbing yourself down. You'll be reasonably intelligent after that. There's another term that we use in the States, in the colonies, I think is what you still call us over here. And that is broker, business broker, and that's someone
Yeah.
is, brokering a deal. And then there's nothing wrong with that, but they're usually smaller things. Someone that sells the corner pizzeria or a dry cleaning business. And there's a good role for that. There's nothing wrong with that,
Yeah.
but they tend to be smaller roles or smaller businesses. That's not what we
Fine.
do. So
Very good.
and as far as what goes on across the pond in the investment banking world, I think you guys still have castles and you're still charging up with horses and you all got your banners out there and right or something like that over there. We're
Exactly.
yeah we're a little war behind the time over here in the colonies, but that's what we do here.
Interestingly enough, I know I picked up a point, which is what you said. It's easier to sell a company than it is to buy a company. And you referred to the metaphor of, it's like a buffet type of thing.
Yeah.
But then a kind of like interesting stat here, which you probably already know anyway, less than 48% of business owners around the world don't have an exit strategy and less than 18% ever sell. So do you think that there's probably a strong correlation between those stats and also not enough businesses to be able to buy out there?
What are the demographics of these businesses? Are we talking about all the companies that are set up, just some little entity that maybe someone sets up to handle some revenue that comes in from a couple apartment buildings, or are these more sizable businesses that have suitable, we call it revenue, you call it turnover, things that are
Yeah,
doing, 10
yeah,
million pounds a year
yeah,
in turnover and have profits of 1 million or 2 million pounds a year. Size, companies of a size. So what are we
yeah.
talking about here?
This will be like limited companies or LLCs in the US or whatever it might be.
Yeah,
So
yeah, yeah,
kind of like established privately owned businesses.
yeah. The bigger the company, the bigger the profits. Yeah, that certainly helps with the attractiveness of a business. If a business, a lot of small businesses, someone sets up a business and they do very well. They make a very nice living, but it's not a sellable business. And so what you have to keep in mind, someone pointed this out years ago, and I'm stealing it. I'm sure a lot of other people have used it. The company might be a nice company to own,
Mhm,
but it's not a good company to sell.
mhm.
Because if you are the entrepreneur and you are the person who's involved, you have all the sales relationships and you handle the product design and the creative stuff and all the you're dealing with the bank and you're dealing with all the books and you maybe have an accountant, but you're still the main person. You get hit by a bus. You might have some good employees who are helping you, but you're the person. There's really not a business that transacts. And so to sell a business, make yourself expendable. That's the best way.
Yeah.
If you want to increase the value, have a business where you are not needed, and that will help in terms of the interest. Yeah. So some of those stats might be skewed that way. I don't know what the underlying stats are, but I've certainly heard that kind of stuff
But
before.
I think you made a really valid point because I'm really big into education and I harp on about the fact that, the first stage of any exit is to make sure that you are building a business which doesn't depend on the business owner, right? That is first stage number one. And I think that so many people get that wrong. Do you generally find that that's generally seen as a general belief system that people believe that when you mention the word sell or to exit, more specifically, people believe, oh, I'm going to sell my company and that's the end of it. But actually, generally,
They Yeah, some get it. I mean, you have some people who maybe have been through the process before,
Yes.
either as an employee or maybe they have been a principal somewhere else, and so they get it. But a lot of other people, and I've dealt with a lot of uh, successful, sophisticated entrepreneurs, but they don't realize they can sell their business. And a lot of times, the conversation where we get a lot of leads comes from lawyers and accountants and wealth managers, commercial bankers, people like that that might have the ear of a business owner. And quite often the conversation, not always, of course, but quite often a conversation is something like, I don't know what to do. I'm a little bit older. The wife is tired of the winters. We have that place down in Florida. We're spending more time down there where it's nice and warm. And, the kids have doing their thing. And nobody wants to, my son is doing something else and the daughter's a lawyer somewhere. They're not interested in dad's business. I don't know what to do. And then that person, that lawyer, that accountant, some trusted advisor who's also probably become a personal friend says, well, you can sell the business. And they say, sell the business? Who the heck would buy it? How do I do that? Well, the first thing you do is you hire an investment banker. No, 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 no. Look, we don't want to do anything with investments and we don't want a bank. No, no, no. They call themselves investment bankers, but they're just a fancy term for people who I will sell your company. Okay, do you know any of those? Yeah, I got a couple. So that's what I want to do. That's the gambit that I try to play. So I have a network of different advisors that I stay in touch with and do things for them instead of just asking. Nobody likes an asker. And I'm hoping that by staying top of mind with people when they have that opportunity or that situation, that my name gets put on a list. And if there's other names, that's fine. There's also going to be competition, but that's what I want. Talk to Bill. And so a lot of times that's where we get our leads. Business owners are not going on Twitter or X, I guess we call it, looking for things. They're not looking for. They don't know what they're looking for. They don't know they can sell the business quite often. They're not looking for. They don't wake up in the morning. You might wake up in the morning and say, "Oh shoot, we're out of dog food and milk and apples. I'll run over to the store." Not a single person has ever woken up and said, "Oh shoot, I'm out of M&A. I got to go get me some M&A today." No one has ever said that. No one is looking for what we're selling. Okay, so quite often they don't think about it. And they have a lot of, it's quite often jaundiced views of what goes on. And, they don't want to prepare, the
Yes.
business that is just completely, dependent on the owner. They don't want to let go of that. And maybe they can't. And like I said, maybe it's a good business to own, but not a good business to sell.
Yep, very good. Some really valid points there. Love that. Kind of flipping again, kind of staying within this kind of vertical of being able to sell a business. What would you say is, like, I suppose, the hidden deal killer that looks harmless to a founder when they want to sell, but instantly puts, say, a buyer off? They might not be aware of what is a deal killer and what is a seller. So it's kind of like looking for those red and green flags. Anything that springs to mind?
Yeah. Oh yeah, sure. Customer concentration is quite often so let me get a note here before I forget.
Yeah.
The customer concentration. And a lot of times someone is wildly successful because they've done a fantastic job. And in a particular customer is now 30, 40, 50% of the business and they make a lot of money. And boy, I own this relationship and it's been a customer for 20 years. I went to the guy's daughter's wedding and, we take vacations together. We're personal friends, not just a business relationship. This thing is solid and it might be solid. But when someone is putting up their own money and probably leveraging it, probably borrowing money, the worry that, oh my God, 40, 50% of the business is with this one company. And if something happens,
Oh, wow. Yeah.
we're in a lot of trouble because we have investors now. We borrowed money from a bank versus someone who's built up the business. And if they lose half the business, that would be awful. But they could probably survive. Maybe they have to let go of some people, and that's always unfortunate, but it's not going to necessarily be the death knell of the business. And business owners sometimes have trouble with that. Inventory, those companies that are making something or selling a product, right? They have inventory. How rapidly do they turn inventory? That is always an issue. They don't understand that if you're turning inventory only once or twice a year, you're tying up a lot of money in working capital. And they all say, well, we'll sell it. It's good. Yes, I have no doubt, but this is what buyers will look at. And everybody out there has read the Harvard handbook on how to be a jerk. And Harvard says, just in time inventory. I'm beating up Harvard here, which is always fun to do. But it's inventory. We have just in time inventory. Well, most business owners have had just in case inventory. And the pandemic, I think, really hurt in a lot of cases those companies who were reliant on just in time. So there has been a change, but most companies have just in case. I prefer just in case, but that means exploring reliance on a single source of a single supplier. Okay. Hey, great, but you only have one or two companies you buy from. If one of those go belly up or something happens, oh boy, you're in a lot of hurt. So they don't see this because they're dealing day to day with everything. Everything is fine. They know these relationships. They're doing very well, but they don't understand sometimes they need to take a step back and look at it with a fresh set of eyes. And that's a tough thing to do sometimes.
You know what? I want to bring up a couple of points there, and it was really interesting. I cannot count how many conversations that I've had with business owners that have been in what I call a vulnerable position, where they've had maybe one customer or one client that makes up 40-50% of their revenue, right? And they become what I call complacent, and they stay in a comfort zone, right? And then for whatever reason, and it's going to be completely out of their control because they are in a comfort zone, is in they stay there. And then if something happens, they like the shit's going to hit the fan, and it's going to have a massive knock-on effect. And I'm sure you've seen this happen many times over, right?
Yeah. Yeah. It's absolutely true. They just sometimes don't understand. You can be very insular
Yes.
with that. And also when we're insular, we don't look at other opportunities except when we hear certain numbers. And so the other thing that gets in the head of a lot of business owners I've talked to is the multiple. Look, I want to sell the business for as much as possible. The focus really shouldn't be so much on the gross proceeds. It should be on the net, right? Because maybe there's a way of structuring it where maybe that's not the highest gross dollar or pound amount, but it's tax advantage, and you walk away after you pay taxes and you pay all your expenses with more money. That should be the focus. No, a lot of times they don't do that. They're just chasing this big number. I call it the country club number. Yeah, I got 10 times when I sold my business. Oh, I got 11. They just want to brag. Oh, really? I got 12 times. 12 times what? Who the hell cares?
Yeah,
It doesn't really matter. Is it the right transaction? Did you get the money? Is the company going to be on the right path? How much money did you put in your pocket? And does that set you up for whatever you want to do? Retire?
Yeah. I kind of share your same, should we say, frustration or sentiment around what drives me crazy is everyone seems to be obsessed with maximizing their valuation, which pisses me off. When does chasing the highest price then become a bad strategy?
When it has perhaps a lot of, when you're passing up an otherwise good opportunity and you lose that good opportunity of chasing something else that doesn't work out. Remember, valuation is just not a number. That's the other thing that I think business owners have a tough time understanding. You're not going to get $20 million or 15 million pounds or whatever, right? You're probably going to get some cash, and you're going to have some other structure. Maybe you're going to have a seller note. You're going to earn some interest and maybe get your money in 5 years. Maybe they want you to roll some equity and have a piece of ownership in the new company, and then maybe they'll sell that or have some sort of put option for you in a few years. Maybe some sort of earn out where they'll buy the company and they want to see a certain amount of revenue or profit, and then we'll pay you more money based on that. So I've had situations where we were getting offers in the low 20s, 22, 23, 24 million, mostly cash, maybe 22 cash and a $2 million note, things like that. And the client wanted to go for the $33 million deal, which I said no. And the lawyer said, no, not a good idea. It was $2 million cash and a $27 million note and some stock, some penny stock in a Canadian company, their version of a penny stock, which was thinly traded 10,000 shares a day or something insane like that. So you got millions of shares of stock and it's trading at 10,000 a day. You're not going to get out of that position, right? And it didn't work out. The buyer wasn't able to service the debt. The sellers kept getting retraded. Well, instead of the interest payments, here's more worthless stock. It was just it's a real shame. They're great guys and a nice business that they built. That they wanted the big dollar, the big amount. They wanted that stock. They thought that's going to go through the roof, and they should have taken the.
I guess and because you've been involved in many deals, there's this, I suppose what becomes really, and I don't know if you ever become emotionally frustrated with the process, where you've got a someone that wants to sell their company for a delusional massive amount of money, and then you've got someone that wants to buy a company, but they are not prepared to put themselves in a position where it's like, that's ridiculous. And I'm sure you've been in those positions. When you are faced in situations where you have what we call greedy bastard sellers that want to, just get as much money as they can. How do you deal with people like that? Do you just basically say, I'm not getting involved in this? Like, how do you deal with it?
Honesty is the best policy. I give it to them brutally frank and honest. I don't care what people think anymore, so I'll tell them that you're love to get that, but that's just unrealistic. You're not going to get 10 times. I would, fantastic if you do, but you need to be realistic. Here's where you're at. And I just don't, would you pay that kind of thing? And I always ask people to think of the other side of that trade. People will pose, I want this and I want that and I want this. And then you say, well, if somebody offered you the same deal, would you take it? No, are you crazy? No way I would take it. Think about that. The other people are going to be as smart and as sophisticated as you. And to beat up on Harvard again. So a number of years ago, I was on a panel at Harvard Business School. It's a great honor. It's really interesting to go there.
Yeah.
Students, just incredibly smart, very well prepared. But the professors gave us some interesting insight. The little panel and the two professors running this thing, they said these students, they're all, 30 years old or so. They have never failed in their lives. All right. They were top of their class in high school. They pick whatever college. They top of the class in college. They pick where they go to work. They decide to go to business school. Harvard doesn't pick them. They pick Harvard. So these are all very accomplished, very smart people. And they were everybody was incredibly bright. But here's the thing, they never failed. And this class was called Acquisition through Entrepreneurship through Acquisition. Entrepreneurship through Acquisition.
Beautiful.
And you have to go buy a company.
Uh-huh.
That's your Harvard. Figure it out. And so twice a year, the poor people in Cambridge, Massachusetts get a deluge by all these little jerks. Hi, I'm from Harvard and I want to buy your company. Fuck you. They're hanging up the phone. And the teacher said this is the first time they had doors slammed in their faces. They've never experienced this. Think about that, 30 years old, and you've never had a setback. So one of the students was a former Navy SEAL. And so if you're familiar with that, that is to have the physical ability and the mental toughness, and you got to be smart to do that. Very few people can do that. And he was able to do that and obviously did great, and then decides to go to business school so he can go to Harvard. So, I mean, this is a smart guy and incredibly driven. And he was so proud of himself. He said, yeah, I want to buy a company, but I only want to pay 2 times, and I want to have a seller note, and I want to have some other structure. And he was so proud of himself. And I said, well, that sounds like a great deal. And he's, yeah, it is a great deal. And I said, for the other guy, I mean, for you, that's a great deal for you. Have you thought of the other guy? And he didn't understand. He said, yeah, but I want to pay 2 times. And that was a great lesson where if you want to get things done, you just can't think of yourself and what you want and why this is good for me. You have to think of the other side of that trade. And I think a lot of people, a lot of business owners, but a lot of buyers too, they don't think about the other side. They think they're the smartest guy in the world. They're going to, I got this crazy deal. It's all good for me, and it's probably a bad deal for someone else. Who's going to take that bad deal? You got to think of the other side.
Are you ready to exit but have no idea what your actual number is? Most founders I know have a target in their head. Maybe it's 3, 5, 10 million pounds, but they never actually test it against the life that they actually want to live. So here's what happens. You know what your business is worth, but you don't know what you're worth once you're out. And that's the real gap. That's what's keeping you stuck in the business. Zentum works with founders at exactly this point. They help you see the real number, not the guesswork, the actual number you need based on how you want to live your life afterwards. Now, Dominic Baldwin, the founder of Zentum, is offering a limited amount of complimentary calls to sit down with you and listen to hear what your exit may look like. Now, if you're fed up with being stuck and you are looking to build a personalized wealth plan specifically for you, head over to zentum.co.uk to book your call today. I love that. I think, it's really interesting. Just before we jumped on, actually, I was speaking to a young chap. He was in his 30s looking to buy a business. And I know he's going to be listening to this. And I just feel like something like that, someone who is looking to buy businesses right now, because it's a wonderful opportunity to buy businesses right now, especially in a downturn market and uncertainty and stuff like that. I think something like that, what you just given, is absolute gold. So I
Yeah,
think that was great.
yeah,
Thanks for that.
yeah. Sure.
Appreciate that. Now, interesting enough, if our listeners here, if there's anyone, if there's someone here that wants to sell their company in, say, a few years' time, right? And what they're probably focusing on today that buyers really don't care about, what should they focus on instead?
Yeah, a number of things. First and foremost, bench strength of your company, starting with yourself. Are you that person who's integral to ongoing success?
Beautiful.
If you're not there, does the whole thing fall apart? So you need to fix that. You need to have other people who can do the job. You're always going to need someone to steer the ship, at a chairman level or, the high level, but all the day-to-day stuff, people can make those decisions and run the business, and you are not needed. As much as you can get to that is going to be a huge thing.
Beautiful.
Look at the customer concentration or any kind of concentration with vendors, with customers, obviously. What can you do to allay those concerns, mitigate those concerns? Have accountant prepared statements. Okay. So have audits or reviews. We call them over here in the colonies. I don't know if you use the same term in the UK, audits or reviews. And
Know your
especially
numbers.
if you have, especially if you have inventory. Okay. And you should have a unqualified review. A qualified review or audit is only 1 year. You want to have 2 years. Why? Because you want to have those accountants observe your inventory at the start of the year and the end of the year. And this way you will know exactly what your cost of goods are. You have an outside, a third party saying, we have observed inventory start, end. We know what the purchases are. We know what they sold. So we know what the cost of goods are. And if you have a good handle on the cost of goods, then everything else flows from there. And the net income that they're showing and the world famous EBITDA, or Frankenstein's version of it, the adjusted EBITDA, which you got to make it as complicated as possible. But we know, however you want to look at earnings, that's going to be accurate if we have a good handle on the inventory. So pay attention to how quickly you get paid on your AR. What does the aging look like also for your AP? Even that, if you're paying too quickly, if someone's giving you 30 days, why pay in 2 days?
Yeah.
Maybe stretch that out because that will help the cash flow. Inventory, is it all sellable? Do you have any damaged inventory? This is something that is lurking, and you asked me that question earlier. Companies that have inventory, if you have £1 million, let's say you've got 10 million in inventory, but $1 million is obsolete or it's damaged, you can't sell it. That's not simply writing off $1 million and having a slightly smaller balance sheet. That has to hit your earnings. Okay, so that would reduce your earnings by £1 million. And so if you're selling the business and you're getting a multiple of 5 or 6 or 7 or whatever, that's not a £1 million hit. That's a 5 or 6 or 7 million pound hit. This is enormous. So things like that, and you want to do this ahead of time to be prepared for these sort of issues.
Yeah, you made some really valid points there. I love that. And one thing I want to point out as well around the whole kind of EBITDA, because I'm part of some WhatsApp communities that are, they're so obsessed with EBITDA and things like that. But really, is it really the only metric that we should really be using to, not just sell our company, but because or is it, people say it's the gold standard, Adam, that's what we should really use. But I'm like, well, who says?
It's a terrible thing. Thank you, John Malone. That was the guy who invented it. He was a cable TV guy in the States. I think he's still alive. It's a terrible thing. And he was looking at a way of comparing different acquisition opportunities and trying to strip away all the extraneous factors. And so you have to think about EBITDA as if a company was operating in a vacuum.
Yes.
And it didn't have to pay taxes. It didn't have to borrow money and pay interest, or it wasn't earning interest on its money. It didn't have to buy equipment and depreciate that. It didn't have to make acquisitions and amortize the cost and all that kind of stuff. It was just spitting out the widget. What would be, here's a certain amount of revenue. what would the earnings be? So that's what EBITDA is. So that makes a lot of sense. It's probably not the best way, to run the business, but there's a lot of great things that you can pick up when you understand what the EBITDA is. I think more important than that is business owners need to pay attention to the third financial statement. This is going to be a shock to most of you business owners watching this, because I know you look at your profit and loss statement, you look at your balance sheet. We have a third statement that none of you like. It's called the cash flow statement. And I know this because for over 20 years, I have asked business owners, please send me your financials. And I never get the cash flow statement. And it's the first thing I want to look at. And so what does that tell us? Well, that looks at operating cash flow, financing, and investing. And the operating, what is it making by selling the widget? Or do they have sizable operating cash flow because they're not paying their bills, their payables are going up, or because they're selling off all the inventory and all the receivables for penny on a dollar, and the assets are decreasing? So what is really going on? These sort of things are vitally important. And I challenge any business owner to take a look at that and start understanding your cash flow statement in addition to EBITDA. EBITDA doesn't show if you've got all kinds of money tied up in inventory. It doesn't show if you're turning inventory only once or twice a year. So it's a good thing to look at, but there's a lot of other things too business owners should be looking at.
I love that. Some good. That's a really good point there. Your book, M&A for Dummies. When I think of M&A for Dummies, I think Homer Simpson, right? If you can write a book for Homer Simpson, then you're doing pretty damn well. But tell us a little bit about that.
Sure.
It's been out for many years. You're on the second edition now.
Correct.
There's many books written in for mergers and acquisitions, like probably hundreds, if not thousands. What frameworks specifically did you teach in the M&A for Dummies book? Whether it be if people are looking to buy or sell a company for the first time?
Yeah. Good question. Well, first of all, I was not writing it with Homer Simpson in mind. I was thinking of Adam Strong. How could I write this that even Adam Strong would be able to get something out of this? And I think I've succeeded, because now we're talking. So this is happy day for me.
Yes.
Yes, it does look at both sides of the coin, buying and selling the business, which was kind of a bit of a struggle to figure that out. But I've tried to look at it for both sides, because a lot of people don't understand, even though it's two sides of the same transaction. You have a buyer, you have a seller.
Yes.
Very different things that are going on.
Yeah, exactly.
So I tried to tell the story from what I understand: middle market businesses, lower middle market businesses, transacting those businesses, everything from the basic steps, the M&A process, to we get into some little deeper dive into different documents, the indication of interest and the letter of intent, and putting buyers lists together. Buying companies too. This is the brain damage work. And the mistake people make is they think they can go to a store and just buy a company, like you can go to a store and buy a can of beans, right? You don't do that. And search work, and this drives me nuts, most people don't get this.
Yes.
Okay, search work. Write this down, Adam. I'm going to straighten you out here.
Okay.
Is divided into three. Here we go. Three main sections.
Okay.
Search, negotiate, and finance. I'll say that again. Search, negotiate, finance.
Yep.
That's what you need to buy a company. You got to have the money. Quite often that's the easiest. People have the money, or if you have a company that you can buy, you can usually find money. A bank will help support you. Maybe you can find some other investors, friends, family, a family office, private. You can find other sources of capital. That's not to say that if I say this is easy, it's really not easy. It's just relatively easy. It's not as difficult if you have the experience and the connections. Money is usually not an issue. Negotiating transactions, that's the fun part. I love that. That's the great part. Okay. Trying to figure this out and settle issues and figure that. Fantastic. It's playing chess. It's playing poker. I just love that. Search. This is the part that gets the short shrift all the time. And it is the brain damage work. It is the worst part of the job, trying to find a company to buy. So I talk about some things that people might want to do in terms of trying to buy a company. And that is hard, because you don't go to the grocery store. Like I said, nobody wakes up and says, I got to get me some M&A. They think that let's just call up all the business brokers and investment bankers. Show me your listings. No, I'm not going to do that. I do it the other way. I make sure that the companies that we reach out to when we're selling, the potential buyers, we think have a very good, if not, reasonable, if not very good chance of being interested. We just don't show it to everybody. We try to be very careful about this. A lot of times people don't understand that. So the search aspect and things that you can do to find a company to buy, I have some thoughts in that as well. And I don't know if other books do that. I've never read another book on M&A. I can't stand business books. They only let jerks write business books. Seriously, I get nothing out of them. I get a lot more writing books, and if people get something and learn something from what I write, that's all the better. But I have not read any M&A books, and I haven't read a business book in a long time.
Beautiful. In terms of like the search part, because you said within the book, you talk about different tactics about how to search for the ideal. And it's not as if you can kind of like go to your yellow pages, open it up and say, oh, look, there's some loads of business that I can
here
buy.
you go, buy this one.
Yeah, exactly. But I kind of like, from my perspective, and I just look at it from the perspective of, if I was selling my company, why would I go around advertising that I'm selling my company? It sounds like I'm desperate.
Yeah. You don't put, you're selling your home, you're selling your property. You put a sign in front for sale, and you have the realtor's name. Yeah. And 5 people call, hey, we'd like to take a look at that. And that's the way you do that. And that's fine. That makes a lot of sense. You don't do that. Hey, 15 million pounds or best offer. You don't want to do that for a lot of reasons. That employees might get nervous when they don't have to be nervous, right?
No,
what's going on? Are we failing? Should I be dusting off my resume? Maybe I need to quit, find a new job. Competitors, hey, you don't want to do a job with ABC company over there. They're for sale. They're probably having all kinds of trouble. So who knows if they're going to be able to service to take care of you and help you out. So you buy from me. So you don't. It is a very delicate thing. Yeah, you do not want to put a for sale sign. That's why you don't want to put a big, huge, invite the universe to look at this. We want to be as focused as possible. I mean, we might have 100, 150 potential buyers, but we have vetted all those. We've looked at all of those, but cast a wide net. Some are obviously not going to be of interest, but you want to make sure that it's the right amount to capture all the potential buyers, because it takes one. So we might reach out to 100, 150. Only one company is going to buy that company. And out of all of that, we might get out 30, 40 books, describing the company. You might get 10 to 20 offers. You might do 5, 6, 7 meetings. I mean, that's how it boils. That's how it boils down. So we want to be very careful who we reach out to and who we contact about this.
Yeah, you have to be very conscientious. I was giving some advice to a chap who was looking at potentially buying some businesses, and I said, listen, the best deals are going to be the ones that are hidden. They're the ones that are not going to be advertised. They're going to be the ones that are where you have to go and do the donkey work.
Sure.
Basically, in a nutshell. But one thing that sprung to my mind, and it was interesting, I bumped into a chap last week at a networking event, actually, and I'd met him about 3 years ago. Now he's in IT. And I asked him just up front, I said, so what's your exit strategy? And he was like, I'm just at the moment, I'm just focused on growing the company. Okay, no problem. And then I saw him last week and I was like, how's the exit strategy going? And you could kind of feel he was looking a bit like it wasn't a conversation that basically made him feel a bit uncomfortable, And what's really interesting is that, and my point, the question I wanted to ask you is that, and this is something that you might have observed here, is that a lot of founders and business owners feel that the more growth to a business, as in more revenue, right? I should focus on more revenue, means that my valuation is then going to climb. Is it a myth or is it a fact? Let's just bury that in the hatchet.
Sure. Do you want a very specific answer? It depends.
Okay. That's good. That's good.
Yeah. Generally speaking, I mean, first of all, we should be very careful with the, trying to paint a picture with a wide brush there, that this is going to apply everywhere. There's always exceptions, but
yes,
generally speaking, a growing company, that's what we want. It's far better than a company that is declining in sales. That's the falling knife syndrome, right? You drop a knife, you let it fall to the ground, unless you're my wife, who will then try to grab it and then she's cut her finger. But most of us, sorry, Sylvia, if you're watching this, most of us will let that knife fall to the ground. So if the business is falling, if revenues, profits are decreasing, most people will say, let's just wait till this thing hits the bottom and starts coming up, and then maybe we're interested. So growth, yeah, generally speaking, absolutely. Now, what's going on with that growth? Is it just one-time only thing? Is it sustainable? Are the margins decreasing? And maybe that makes sense. Well, we're more profitable, but we've made some changes. We have much bigger revenue, much profits are bigger, maybe smaller as a percentage, but we're growing. And you have to make those determinations. So generally speaking, though, growth, absolutely.
Yeah, very good. All right, cool. Final thought before we jump into the coaching part, which is
Boy.
the exciting part. What, in terms of like, how early should a founder be thinking about the ideal buyer beyond just making money and maximizing EBITDA and stuff like that? Like, how do you profile the ideal buyer? Like, do they start right before they are considering selling, or do they need to consider after they have built all their assets up? Like, what's your thoughts about this?
Well, the sooner that you think about that, building a business and thinking about who's going to buy it and putting the systems together, making sure that I'm replaceable, I'm not needed, make sure that I've got enough bench strength and people making decisions. And I have got people lined up. If somebody leaves, I got other people that I'm grooming. And that's a lot of work, making sure that concentrations aren't that bad, making sure that we're doing keeping good records. We have an outside accountant coming in, and we've got multiple years of audits or reviews. All those things help. And some people do that. Some people just do that because that's how they like to operate things. They may or may not be thinking that this is helpful when they want to sell the business. A lot of business owners, they operate differently. So, the question you asked is a very logical, reasonable, rational question, and quite often people are entrepreneurs because they're not logical, rational, or reasonable. They're emotional, they're brilliant, and they see something and everyone else says that's not going to work, and they don't believe it, and they just plow ahead and they have great success. That's fantastic when that happens, but a lot of times they just operate by the seat of the pants. And you've probably seen that too, where someone, and I've seen entrepreneurs here in the States, where seat of the pants and just putting out fires, and they're fantastic at that. And they're able to get the business to a point, and they have the right skill set for that. And then it becomes a real business, and they flounder at that, where they've got people, and it's not just, manic activity every day. They have systems, they have redundancy, and then they lose interest. And sometimes if they don't get out, they will run that ship aground. So understand, and that's a tough thing too, for all of us to understand where we're good at, where we're not good at. It's sad when it happens, but it's easy for us to sit back and criticize that, because it's very, very difficult for someone who's had success to see that maybe I'm not the right person to take the company to the next level.
Yeah, I think it was about 6 months ago, I was interviewing another guy who, same again, area of expertise was M&A, but he recommended to reverse engineer about buying a business, build a business based on what the seller is prepared to buy. And it was just a really interesting tactic. And I just thought, well, that's such an underestimated tactic. In your personal, when clients come to you, what advice do you give to clients? Do you advise clients to, like, say to them, well, having those ideal buyers in mind, do you recommend people to then build a company based on what their needs and wants are, or do you wait till the end, or does it depend on circumstances?
Well, yeah, to give you that very specific answer, it depends. As much as I would love to be able to have those conversations years in advance, yeah, that just doesn't happen. Usually you're having those conversations when someone is ready to go, or they're getting close, and getting ready to go. Usually by the time we get involved, business owner has probably been contacted numerous times by people, and they probably have a short list in their mind of companies that might be interested. And, here's we have 4 or 5 that I think would be interested because blah, blah, blah. I've got a stack of letters I've received over the last few years from all these different PE firms and whatever, and who knows if there's anything there. So you can start with that, and then you build your buyers list. But a lot of times we'll reach out to those companies that the client thinks, yeah, this is a home run, and it's a great fit for them because of, I don't know if home runs, that's a American idiom. Does that make sense?
Absolutely, it's baseball. Home run.
I don't know what the cricket term is there, but we think this would be an absolute great fit. It'd be a home run. because of all these different reasons. And then we will call and have a conversation with that company. And maybe they look at the materials and they say, yeah, it's not a right fit. And so sometimes the client is saying, well, how come they aren't interested? Well, they weren't, because you don't want to say, you don't want to sound rude, but you were wrong. Sometimes you don't know this until you have a conversation, but that's why you don't want to have just, one or two potential buyers. You get something done, but you want to have a larger pool, because you'll be surprised at things that buyers that you think are going to be an absolute fit are just not interested for whatever reason. Maybe they're having problems. Maybe they've made other acquisitions and they're trying to digest. Maybe they're pivoting away from your business. So there's all kinds of factors that quite often you don't know. And things that you might not think are a fit. I've had this happen where you call up someone, they say, yeah, perfect timing. We had a meeting yesterday and we were talking about this. So yeah, let me see it. So you just never know what is out there until you make those overtures and you have those conversations.
Some good stuff there. Right, ladies and gents. Well, listen, first of all, hope you've enjoyed the masterclass, because that was just absolute, if you haven't already done so, pause this, rewind it. So you can, honestly, I always find, I don't know about you, Bill, but I listen to podcasts quite a lot, and I like to listen to them at least twice.
Yeah.
Because you just pick up new stuff all the time. But that's great. Listen, for you guys that are listening in, we're going to move into the coaching side of stuff. And Bill already knows. I've already given him some context about what we're going to do with this. So I'm now going to give the context to you guys that are listening in. Now, for full disclosure, I'm looking to make it a first acquisition this year. And I've already informed Bill of this. And Bill is now going to be coaching me on today's call. And hopefully he's going to give me a few pointers, a few tactics, maybe a few strategies. And I'm
ready to go. Here we go. Here's what you need to do. There's just one step here. I'm going to send you an engagement agreement. You hire us. No, I'm not kidding. You set yourself up there, man. Okay, so you want to buy a company. Why? What do you want to do? What kind of business are you looking at buying? Can you share?
Great question. Absolutely. So what the ideal business I'd love to buy is what I call a baby boomer business, been in 20, 30 years, boring businesses, as I like to call them, professional services. Yeah, got some great loyal customers. Founder's wife is banging on the door saying, hey, love, are we going on that cruise ever? You promised me this like 10 years ago. Are we going to be going? And so he's getting a little bit sweaty around the collar and is now looking for an exit. So that is really the ideal buyer, the ideal business that I'd like to buy.
Okay. Good luck. You're not going to find that.
You're telling me there's not many established people.
It's a terrible idea. Everybody in the world is saying that. I want to see something more specific. That's awful.
Okay.
You've had your whole life to come up with this. That's it. Okay, I'm just giving you a little grief here, but seriously, that's an awful idea. It's everybody says that. Okay, first of all, just stop. Oh, the baby boomers, and we're giving this massive wealth transfer. Everyone's been talking about this for years. That's not what drives something.
Okay, fine.
So the first thing is, what sort of business do you want? Are you looking at a manufacturing company? Do you want to distribute something? Do you want a business service? Do you want to buy an advertising company, a marketing company? Do you want to buy, a restaurant chain? A trucking company? There's no right or wrong. So what are you, do you want to buy?
Okay.
Here's a great company for all you European companies. Buy a company that puts screens on windows. Because every time I go to Europe, you don't have screens on windows over there. I don't understand that. You clean up the market over there. But no, seriously, figure out specifically what you're looking for. Okay. So that's number one. Okay. Do you have any ideas, or do you want to think about that? Okay.
No. I know. Professional services and SaaS businesses.
Okay. Professional services and SaaS. Well, remember the three components of M&A. What are those three components of buy-side M&A?
I wrote them down, by the way.
Okay. This is your class here.
So search, negotiation, and finance, right?
So do you have the finance? Talk to me about that. Do you have the dough, or do you have access to dough?
Well, I can get access. Yeah, absolutely.
Okay. So negotiate. You're a smart guy. You can figure that out. So it's the search. So how do you find these companies? You're not going to call up investment bankers, hey, show me all your listings of SaaS companies and business services, right? So here's what do you play golf? Do you golf? Okay. I want you to buy a time machine, go back in time, take up golf when you're younger. So by the time you get to this advanced age, you're pretty good at it. Okay. That's number one. Okay. And the reason I ask that is, a few years ago, I was playing golf with a friend of mine who's an executive at a bank here in the Chicago area, and we're at his country club, very nice course. And he said, "Bill, here's your playing partner, so and so," and he's a former private equity guy. He told me this beforehand. He's a private equity guy, and he's trying to buy his own company. Left the firm, he wants to have his own company. So we're golfing. I'm driving the cart, and I asked the guy after a couple holes, "So I hear you want to buy a company?" Yeah, I do. He's real proud of himself. And I said, "How's that going?" And he had this collapsed look on his face, like all those smart students at Harvard when I asked them, how goes the search for a company? And all those Harvard kids had this look of, oh my God, he knows the bad thing, the time I failed. They all shrunk away. So this guy kind of shrunk away, and he says, "It's a lot harder than I thought." I said, "Yeah, it's terrible. It's brain damage work. It's awful. Don't do it. Go away. Go find a real job." And he had a membership at Medina, which is a fancy golf club in the Chicago area, Medina. And they've had U.S. Opens here and Ryder Cup tournaments. So it's just a top tier golf course.
Uh-huh.
And I said, "How many business owners have you invited as a guest at this fancy golf course to go play golf?" And he laughed at me. "Why would I do that?" Now, here's a smart guy, and he can't figure this out. This drives me nuts. He's got a golden ticket. He's got something to offer. He's not asking. And I said, what you should do is put a list together. Do your homework. Don't call up people and say, I call it a passive ask, right? You're passively asking somebody to do your job. Write that down. I'm trying to get this to become part of the cultural norm. Passive ask. When you passively ask someone to do your job, here's a list of all my criteria for a company. And when you find the perfect company and that's perfect for me, you let me know. That's your job to go find it. That's what people are doing. I need a job. Here's what I'm looking for. When you find the perfect job for me, let me know. That's a passive ask. You're passively asking someone to do your job. Okay. When people ask you for things, do you jump at it? Hey man, I'm kind of tapped out. Can you loan me 1,000 pounds? Someone calls you up and says, hey, I've got a couple tickets to the Arsenal match next weekend. Would you like them? Yeah. See, even if you can't go, right? Because you've got a conflict or something, you're probably going to respond, hey, thank you for thinking of me. I can't go, but please keep me in mind. You respond to offers. You don't respond to asks. Okay. Think about that, kids. So if you want to buy a company, figure out something you can offer. So that the fancy golf course is an easy one. If you have something that might be of interest to other people, man, you can offer that. So whatever that is, so let's just use the golf thing. So I said, you put together a list, 20 companies, do some homework, do a little effort here, not passively asking people, but not the type of companies, but actual specific companies that you might be interested in buying. And then you have to contact them. You have to get a hold of the owner, which is going to be tough because the owners have a target on their back. Everybody's trying to sell them something, right? They're trying to sell them, bespoke suits and fractional jets and fractional CFOs and CRM systems. And it's just AI up the wazoo today. And it's crypto and all this crap. It's a bunch of, it's the caravan. That's a term my dad had. Every 5 to 10 years, a new caravan of assholes shows up on Wall Street with a can't miss idea. That's all this is. Okay. So business owners have a target on their back. Everyone wants to sell them something. If they don't want to sell them something, they want to sell their company or they want to buy them.
So true.
Right? So you got to break through all of that. You've got to find some way of connecting with them. Is that a phone call? Is that sending a physical letter? Don't send an email. I spend half my day deleting email, right? But have an offer in there. If you get a hold of them, you can say, here's my background real quick. I see something in your industry and I have a thesis. I have a thought about this. And I would love to get your idea. You're an expert here. Can I buy you lunch? Hey, do you play golf? Tell you what, I've got a membership at blah, blah, blah. Would you like to go out of as my guest here? And if you can do something to break through all this noise of asking, right? And that's tough. If you put 20 companies on that list, you're not going to get 20 meetings, right? You might get 1 or 2 or 3. And if you flame out, make another list of 20, okay? But you want to have something that you're offering, okay? Offer something, and then you have a conversation with the person, and then you determine how artful you are, because M&A is not science, it's art, right? You want to have conversations with people, get to know them. What are you looking to do? What are you looking to accomplish? You don't want to tell them, here's what I want. Me. Does this fit? No, you want to get them talking about themselves. I like to ask them, what do you want to do when you grow up? Now, that's great when you ask a 70-year-old guy that. What do you want to do when you grow up? They usually kind of befuddles them, and then they laugh. Oh, it's kind of a silly thing to say, and they laugh. And if it works right, they're relaxed and they're
Yeah.
talking about what they want to do. Well, I'd like to do a round the world trip with the wife or spend more time with the grandkids or golf, or I'd really like to buy a boat and go sailing throughout, buy a big sailboat and go sailing throughout the Caribbean or whatever their interests are. If you get them talking beyond work, I think you have a much better shot of perhaps having that conversation. Hey, I might be interested. Would you be willing to talk to me about putting together a transaction to acquire your company? So those are some tips. It is not easy. It's a long-term process. You're going to kiss a lot of frogs to get there, but remember, offer something. Stop asking. The whole world is asking. If you can offer something, that increases the odds that the door opens for you.
It's really interesting. I got a friend of mine, and he is looking to make his first acquisition of buying a law firm, believe it or not. And his strategy was, I'm going to send out some physical letters, like, that you get in the mail type of thing. And because no fucker sends out physical letters anymore, right?
Exactly. It's a great idea.
And so he did that, but I think he got out of 100 letters, I think he might have got 2 responses out of 100.
Phenomenal.
Unfortunately, none of them came about, but then he did it again just because he wanted to see if anything would change. But he did get 3 meetings in the end. I have to catch up with him to see how if he but it's really interesting, I think, what you've added there, which is the extra part, which is how can you bring extra value to the relationship, which is, hey, let me take you out for lunch or whatever it is. And I think that that's crucial.
Something that you can offer. You offer that opens up so many other opportunities.
Mm,
Because think about your life and people ask you, God, here's this guy again,
mm,
asking, asking, asking. It's all about me. When it's genuine, right?
right.
An offer is not hire me and I'll do work for you. That's still an ask, right?
Yeah. Very true. Very true. Love that.
It has to be genuine, and you really have to do that. So if you can do that, that increases, I think, the odds of having those conversations with people, and when you get to know them and they get to know you,
Yeah.
and then advance from there. Does it get in the business? Do you continue to develop the friendship? Is there a friendship there? And do the families get involved and all that kind of good stuff? So that is always a great tech. It's a longer term. Trying to buy a company is hard. People have to understand that. You have a 45-year-old guy who has his own business and he's doing really well, and he made 3 million pounds last year, and his health is good, and he jumps out of bed in the morning, he loves it, and wife is happy, and he's got a couple kids, and they're doing fine, and he's got a great life. What could you offer that guy to buy his company? I'm 45. What am I going to do? I love it. I'm making great money, and I love everything about what I do. You couldn't offer that guy enough money. That's the other thing too that people don't understand. So that some people you just can't offer because he's not ready, nor should that guy, that hypothetical.
Yeah, and I think it's a fine balance between timing, but also the other thing that you could potentially look at is looking for a pain point, or a pain point with, or something that they're frustrated with, that they're not kind of fulfilled. Does that make sense?
Sure.
Because I think that if you can take someone's pain away, it's like, if you got a bad back and you have to go to the osteopath or the chiropractor, and it's like, what if I could take your pain away and it costs you a few $100s? Would it be worth it? Hell yeah, of course.
Well, great. That's a great point, and that's a problem that especially a lot of younger people and older people should know better too. Is they have a solution that looks for a problem, and when you have a solution, I call it a SLAP: solution looking for a problem. That's another Bill Snowism. Solution looking for a problem. That's a tough sell because I don't have a problem. I don't want your solution. If you have a problem, you have the back pain. Yeah, I've got a problem. You have a possible solution. Let's talk about it. Yeah, that
Yeah,
I'm now interested. Yeah,
yeah.
if you can find those pain points. Now, that's a good strategy, but that pain point for someone else might be a pain point for you as well. That maybe you're just inheriting the pain point, but that could be something. If you have a solution to a genuine pain point, that could be a very good solution.
And I think it's also about looking to see what the bridge is. Does that make sense? Because everyone has a different bridge, right? So everyone's different circumstances. Everyone's in a different life cycle. You might have someone that's been in business for a long time. So I think there's so many different moving parts that you have to take into consideration. I think was what you're alluding to. But very good. Love that. This has been great. Fantastic. Thank you so much for my coaching session, Mr. Snow.
You
I
are very
appreciate it.
welcome. You're welcome.
Very good. Well, listen,
Straighten you out.
it is absolutely 100%. Well, listen, I know you've got a new book coming out soon. Is that correct?
Yeah, I started to put together some of these emails I was writing years ago. So it's called the Gimme Chronicles. So I had a character named Gimme, which I invented as part of my fabulous networking and marketing tool. So I was giving away tickets to sporting events, the Chicago Cubs baseball team here in Chicago, and then a lot of other things too. And I just decided to write some. It was just told the spur of the moment, but I ended up developing a nice network of people who enjoyed the emails, and so it's business communication like you haven't seen before. So it's very creative and very fun. So I put them into a little compendium of a book here, and I'm just putting the final touches on. Now that I've got a page count, I've got someone who did the cover and all that stuff. So
Beautiful.
she'll finalize all that stuff here. So hopefully in the next month or so, I'll be able to finish all that work, and it's just another self-published thing, but it'll be on Amazon. So that hopefully be a fun little book for people to read.
So I guess this is going to be released in the summer.
Hopefully sooner. Hopefully sooner. It depends on my schedule and what goes on. But yeah, I would like to have it done as soon as possible. So I'm just waiting for the cover to get done. That my designer's been out for a little bit, but she should be back later this month, and then I can get that. And then there's always fine tuning. It's just a lot of work just to get a book done, because you get it, you load it up, and I use the Amazon Kindle publishing, whatever they call it.
Yep.
Which is a really good platform, but sometimes it's a little bit of multiple iterations and making little adjustments just to make sure the book is laid out right. So that takes a little bit of time, but it's not just a little bit of time. It's not that complicated. So hopefully in the next few weeks, I should be able to get that out.
Very good. For you guys that are listening in, listen, I hope that you've enjoyed, first of all, mine and Bill's interview. We have gone through a huge masterclass, and Bill's dropped so many massive golden nuggets, whether it's you are a buyer or whether you be a seller. Like, there's just so many different things to take into consideration. What I would highly endorse you to do is make sure you go, first of all, make sure you follow Bill over on LinkedIn, because I know that he plays on there a lot, but also check out Mergers and Acquisitions for Dummies, which is over on Amazon, Barnes & Noble, all other good bookstores out there as well. And also feel free to make sure that you keep an eye on Bill's socials because of his new book that's going to be coming out, hopefully before the summer.
Yep.
But listen, first of all, I want to say thank you so much for jumping and jamming with me. It's been a lot of fun, right?
I've had a blast. This has been absolutely fantastic.
Absolutely. And for you guys that are listening in, thank you so much for listening in. If you have enjoyed our episode, me and Bill, please do me a favor, head over to Apple or Spotify, leave a 1 or a 5-star review. Everything is super, be super grateful of that. And I have actually one other ask before you guys leave as well. We've actually been nominated for Podcast of the Year. If you enjoy our podcast, please do me a favor, there's in the show description notes below, there is a nomination. Just click on it. It'll take you less than 30 seconds. If you like our podcast, you enjoy it, you think you get some value from it, please, I would love your nomination. So from me and Bill, thank you so much. And hopefully we'll see you again on The Business Strategist. Take care and speak to you soon. Cheers.